Hi there, welcome to Grain TV. It's Wednesday, March 9th. We had the USDA crop report. We'll take a look at that in a second, but first let's look at the closes. Corn was off 1 cent a bushel, beans were up 1 1/4, and wheat closing higher with a 3 cent advance. The USDA report today was nothing more than boring, if you will. The numbers were not terribly different than what most people had thought going into the report. There are a few items worth talking about. First of all, let's take a look at the U.S. carryout projections. And overall, corn and wheat were unchanged from the February numbers put out by USDA. That was somewhat supportive because most traders had been expecting USDA to cut exports and increase carryout, but that didn't happen in this report. On the negative side, beans was up in carryout to 460 million bushels versus 450 last month. That too was not terribly surprising because we've had a poor crush performance, and so USDA took this report to lower crush figures for the U.S. by 10 million bushels. On the world numbers, these were somewhat interesting from the standpoint of wheat because we saw a 2.5 million metric ton decrease in India's wheat production. That's the number 2 largest wheat producer in the world next to China, and we have been talking about the problems they've been having in that part of the world during their growing season, and so USDA used this report to drop the production forecast for India. That helped give us a somewhat lower carryout number than what was expected and lower than last month as well. On soybeans and corn, USDA did not change their South American crop production forecast, which was somewhat surprising. Some people looked for higher corn and soybean production forecasts. So traders have to be asking themselves now, here we are in March, is USDA done ratcheting up the South American crop production numbers? We've sort of heard some talk of maybe better than 100 million metric tons out of Brazil. 101 to 101.5 have been bantered about, but USDA has mostly stuck to that 100 million metric ton for the better part of the South American growing season. So, this may be as bearish as it gets as we move into spring planting time. Let's talk about the reaction to this report in soybeans. That was the one commodity that had somewhat negative news with the higher than expected carryout number, but not overly bearish. You can see here on the 5-minute bar chart for March soybeans that we did see a big drop going from 887 down to almost 880. We traded down pretty quickly in about a 10 to 15 minute period, but after we got past that initial downfall, we grinded higher throughout the day. And I think this goes on to what we said yesterday on Grain TV. We think this market has been beaten down a lot. We've had all the bearish news thrown at it for the better part of 5 months since the U.S. growing season came to an end at harvest. And so will the shorts in this market that are record large in wheat and near record large in corn and beans continue to hold those positions in the face of news that is really nothing different than what we have been factoring in? And in the case of wheat, where we have India's crop problems, we have the U.S. plains that we're beginning to worry about. Will they continue to hold those shorts, or will they start to run for the exit? Let's talk about that wheat market, and in particular what's going on between the hard red winter wheat belt in the plains and the soft red winter wheat belt east of the Mississippi River. And there are a dichotomy of growing conditions right now. In the plains, from North Dakota all the way down to Texas, we have fairly dry conditions that have been persisting. We've had unusually warm conditions. We've got some of that crop coming out of dormancy early. So if you look at Oklahoma, you look at Kansas, those areas are not seeing much rain in this current pattern for the next 7 days. On the other hand, the soft red winter wheat belt, certainly into the lower Illinois area and down in the southeast, is seeing way too much rain in the neighborhood of 5 to 7 inches over the next 7 days. Look at the hard red winter wheat territory. Again, most of that hard red winter wheat against Kansas City Futures Exchange is in that western half of the Central Plains from Oklahoma up into Kansas, where they're not seeing any of this significant rainfall. So it begs the question, are we seeing a turning point here? We've talked about this long-term trend line that has been violated at 480 on Kansas City July wheat. We've managed to keep above that and managed to close higher than that. Today in particular, getting up about 4 cents above that trade. So is this a turning point? I think it has the potential to be. You know, we've certainly beat this market down quite a bit. We have India's crop, which could be problematic. They will likely be shopping for high quality wheat, high protein wheat. That I think is where the potential lies for the wheat market. That's all we got on Grain TV. As always, if you have questions, give us a call, 877-472-4607, or if you're interested in how we can help you in your grain marketing services, visit us online at grainhedge.com. GrainHedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1 hour data interval means the chart pattern was constructed from a 1 hour bar chart. And when you are using the GrainHedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use Technical Alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.